Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income play. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, where you can find the link to the website in the description below. Mortgage Real Estate Investment Trusts, or mREITs, like today's income pick, Two Harbors Investment Corp, traded on New York Stock Exchange under symbol TWO, are a great way for everyday investors to be landlord without actually having to own properties and deal with the tenants. mREITs are specialized financial vehicles that provide capital for real estate through the purchase of mortgages and mortgage-backed securities, where equity REITs own and manage physical real estate. mREITs invest in debt tied to real estate properties. And that's why investors need to pay attention to interest rates. mREITs make money on the difference between the interest rate they charge on mortgage loans and the interest rates they pay on what they borrowed. For shareholders, mREITs are one of the best dividend vehicles on Wall Street. And that's because they legally have to distribute at least 90% of their taxable income to shareholders in form of dividends. And that brings us to Two Harbors. John, what can you tell us about this mREIT?
Thanks, Mo. Two Harbors Investing finances and manages mortgage service rights, or MSRs, agency residential mortgage-backed securities, or RMBSs, and other financial assets through RoundPoint here in the United States. RoundPoint Servicing is actually one of the largest servicers of conventional loans in the U.S. The REIT's investment strategy is primarily focused on MSR investments, which are designed to produce positive returns across different market environments. In fact, over 60% of its capital is allocated to hedged MSR, with the remaining capital in hedged RMBS. Does all that mean? Two Harbors' portfolio is less exposed to fluctuations in mortgage spreads than mREITs with RMBS portfolios without MSR.
John, looking at financials here, this mREIT reported solid fourth quarter results.
Yeah, despite a large fluctuation in short-term interest rates, thanks to two-thirds of its capital allocated to low coupon MSR, its portfolio was able to generate stable and positive cash flows. This included a book value of $14.47 per share. Now, it also reported a comprehensive loss of $1.6 million, or 3 cents per share, but it reported net income of $264.9 million, or $2.54 per share. Earnings available for distribution were $21.1 million, or 20 cents per share.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. John, I see that it was able to pay a fourth quarter dividend of 45 cents per share.
Yeah, as a mREIT, and as you noted earlier, Two Harbors has to distribute at least 90% of its taxable income to shareholders in the form of a dividend. Now, in the fourth quarter, the REIT returned 45 cents per share to shareholders, or $1.80 per share on an annual basis, for a forward yield of 13.31%. Now, typically, an ultra-high yield dividend is a result of a lower share price, and that's because share price and yield have an inverse relationship. Fortunately, this isn't the case with Two Harbors. On February 18th, TWO stock hit a fresh 52-week high of $13.67 per share. Now, since reporting its fourth quarter results on January 29th, TW stock has rallied of this recording, impressive 14%. Now, TWO stock is also up 21% over the last 3 months, 19% year to date, and a little more than 21% year over year. And the outlook for TWO stock remains solid, with Wall Street analysts providing a 12-month share price target range of $13.75 per share to $15 per share.
John, thank you so much for your insights. Just to recap, Two Harbors Investment Corp is an mREIT with diversified portfolio. It reported strong fourth quarter and full year results, and the outlook remains even better. The management of the company also noted that industry tailwinds, combined with historically wide nominal current coupon spreads and its unique hedged MSR-centric strategy, should continue to generate attractive levered returns in 2025 and beyond. All of this is good news for common stockholders and the 272 institutions that hold 71.4% of all outstanding shares. 3 of the biggest institutional investors in this mREITs are BlackRock, Vanguard, and Allspring Global Investment Holdings. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.